Let me ask you a question that might make you uncomfortable. What if the reason you're not making money in trading has nothing to do with your strategy, nothing to do with your indicators, nothing to do with your entries, exits, or risk management? What if the real reason is that you simply don't know how to wait? Because here's the truth most traders never want to face. The hardest part of trading isn't finding trades, it's resisting them. The hardest part of trading is doing absolutely nothing. And that sounds simple until you try it. Most people think successful traders are constantly clicking buttons, jumping in and out of positions, reacting to every candle, every breakout, every tweet. They imagine intensity, action, excitement. The traders who last, the traders who actually make money year after year, spend most of their time sitting still, waiting, watching, and ignoring the urge to feel busy. Today, I want to break down why trading is fundamentally a waiting game, why patience is not just a nice trait, but your greatest edge, and how learning to do nothing at the right times can completely change your results and your relationship with the market. The uncomfortable truth nobody wants to admit. Let's start with something that goes against almost everything you've been conditioned to believe. Trading is boring. Actually, let me be more precise. Profitable trading is boring. If your heart is racing every session, if you're constantly jumping in and out of positions, feels like a shot of adrenaline, there's a very high chance you're not trading, you're reacting. And reaction is expensive. The market does not reward excitement. It does not reward urgency. It does not reward boredom relief. The market doesn't care how long you've been staring at the screen. It doesn't care that you haven't taken a trade in 3 days. It doesn't care that you feel like something should happen soon. The market will move when it moves. And your job isn't to force action. Your job is to wait for alignment. That's it. Why most traders lose before they ever realize it. Here's what separates consistently profitable traders from the vast majority who blow their accounts. It's not secret indicators. It's not expensive mentorships. It's not some magical entry technique. It's the ability to sit on your hands when nothing is there. Most traders don't lose because they don't know how to trade. They lose because they can't stand the feeling of inactivity. They confuse being active with being productive, and the market punishes that confusion relentlessly. Think about a lion hunting. The lion doesn't chase every animal it sees. It doesn't sprint non-stop across the savannah burning energy. It watches. It waits. It conserves strength, and it strikes only when the probability is overwhelming, when a weak or isolated target presents itself. That's trading. You are the lion. The market is the savannah, for a reason. But most traders don't want to be hunters. They want to be entertainers. They want movement. They want stimulation. They want to feel like traders. And that's where everything breaks down. One of the most destructive forces in trading today isn't the market itself. It's comparison. You open social media. You see someone posting wins. You see screenshots of trades, many positions they took today. And suddenly, waiting feels wrong. You start thinking, maybe I'm missing something. Maybe I should be more active. Maybe real traders trade every day. That pressure pushes you into trades that were never part of your plan, not because the setup was there, but because your ego needed validation. Let me be honest. I was that trader. I used to believe that more trades meant more opportunity, that if I just stayed active enough, results would follow. There was a week early on where I took over 20 trades, and here's the part that still hurts to think about. Only a handful of those trades actually followed my strategy. The rest were impulse, half-recognized patterns, levels that kind of looked good. Trades taken because someone else mentioned a ticker. By the end of that week, the damage was done. Not because the market was unfair, not because the strategy didn't work, but because I didn't wait. And when I reviewed the data, the truth was brutal. If I had taken only the trades that matched my rules, I would have had a profitable week. Everything else, every impulsive decision, erased that edge. That's when it clicked. The problem was never the system. The problem was my inability to sit still. Waiting is not passive. It's a skill. Waiting sounds easy until you realize how unnatural it is. Human beings are wired for action. We want feedback. We want movement. We want instant results. But the market doesn't operate on human emotion. It operates in cycles: expansion, reversal, continuation. And within those cycles, there are specific moments where probability shifts in your favor. Those moments are rare by design. They might show up once a day, once a week, or sometimes not at all. And the discipline to not trade when they aren't present is what separates professionals from gamblers. Why most almost good setups are dangerous. Let's say your strategy requires multiple conditions to align: strong impulse, psychologist, clear inducement, confirmation, context. Now, ask yourself honestly, how often does everything line up perfectly? Not often. And that's the point. Most traders get stuck in the middle ground, trading setups that are close enough. Close enough destroys expectancy, because the market doesn't reward effort, it rewards precision. And every time you trade boredom, impatience, or fear of missing out, you're eroding your edge. What happens when you actually wait? Here's the beautiful part most people never experience. When you only take trades that meet every single rule, everything improves. Win rate increases. Risk-reward improves. Drawdowns shrink. Confidence grows. Not because you're guessing better, but because you're executing consistently. You stop wondering if you should have taken a trade. You stop second-guessing yourself. Whether the trade wins or loses, you know you did the right thing. Why your system must be yours. This leads to one of the most important truths in trading. You cannot borrow conviction. You can borrow ideas, can borrow concepts, you can borrow belief. When you trade someone else's system, you don't fully understand it. You don't know its limits. You don't know when it's supposed to struggle. And the moment losses show up, which they always do, doubt creeps in. That doubt pushes you to abandon the system, which sends you searching for the next one, which restarts the cycle. The illusion of the Holy Grail. At one point, I thought I had found the perfect strategy. It looked sophisticated, complex, impressive, and the person using it seemed unstoppable. So I tried to copy it exactly. What followed wasn't success. Constant screen time, fast decisions, a rhythm that didn't fit my life or my psychology. And when trades went against me, I had no clarity. I didn't know whether to hold or exit. I didn't know if I was wrong or just early. Because I wasn't trading with understanding, I was imitating. That's when I stepped back and rebuilt everything. Not from scratch, but from understanding. Conviction comes from ownership. I studied the market deeply. Price behavior, cause and effect, context. Slowly, a system formed. It wasn't perfect, but it was mine. I knew why each rule existed. I knew when it should perform well. I knew when it would struggle. And that changed everything. Because when losses came, and they did, I didn't panic. I trusted the process. The hidden danger of other people's opinions. One of the fastest ways to destroy discipline is letting outside voices into your decision-making. You're in a trade, everything lines up, your plan is clear. Then you check commentary. Suddenly, doubt appears. Someone with a big following says the opposite. Someone mentions a catalyst you hadn't considered, and confidence is contagious. That single moment of doubt can undo hours of preparation. I've exited trades early for that reason, only to watch my original target get hit without me. That lesson was expensive and unforgettable. Once you enter analysis, should already be complete. There is nothing new to decide. Looking for opinions after the fact is emotional sabotage. Now, when I'm in a trade, the noise disappears. No commentary, no opinions, no distractions. Just the plan. Real confidence doesn't come from winning streaks. It comes from data, back-testing, forward testing, seeing your system succeed and fail hundreds of times. When you know the statistics, truly know them, losses stop feeling personal. They become expected. That's when patience becomes natural. Why waiting feels so hard. We live in an instant world. Fleeing is on demand. Trading is the opposite. The market doesn't respond to urgency. And until you accept that, waiting will always feel like suffering. The shift happens when you stop seeing waiting as inactivity and start seeing it as execution. Waiting is discipline. Waiting is protection. Waiting is edge. The math of patience. One high-quality trade per week. That's it. Over time, that consistency compounds. But impatience resets progress. Chasing more trades doesn't increase opportunity, it dilutes it. Emotions are information, not commands. Fear, excitement, frustration, they will show up. The key is not eliminating emotion, it's refusing to obey it. Rules create space, and space creates consistency. Why routine changes everything. Structure removes temptation. When trading fits into life, not replaces it, performance improves. Pressure fades, clarity increases, and waiting becomes easier. Losses are tuition, not failure. Every loss is feedback, not emotional feedback, informational feedback. If rules were followed, nothing is wrong. If rules were broken, that's the work. The long game, most people never play. Trading is not about fast results. It's about sustainability. Years, not months. Those who survive long enough to develop patience eventually separate themselves from the crowd. The final truth. Trading is not about doing more. It's about doing less, better. Waiting is not weakness. Stillness is not failure. Patience is the edge. The market will always be there. Your capital will not. Protect it. Wait. And when the moment comes, act with conviction. That's the game. And mastery begins the moment you stop rushing it.